Right. So one of the biggest questions that we have right there, along with what can we do about inflation, is what do we need to know about this market volatility? Are we heading into a recession? And how long is this going to last? What can we do about it? And how, most importantly, is this going to affect me? That's what we're hearing from people asking those questions, and it's a very important question that really everybody needs to be asking themselves. The answer to that, how is it going to affect me, is
Ask Abby, providing answers, insights, and education designed to give you the tools and knowledge you need to thrive financially and live confidently in retirement.
Here once again with Abby Reed on Go Ask Abby. Abby Reed is CEO of Reed Financial Group, the retirement family, and here to answer and address some of the difficult financial investment and retirement planning questions submitted at goaskabby.com. Now, Abby, we have received several variations of a similar question. People worried about market volatility and wondering what they should do about it. Is there anything that we can do about market volatility, or what do we need to know about what we are experiencing in the markets?
right. So one of the biggest questions that we have right there, along with what can we do about inflation, is what do we need to know about this market volatility? Are we heading into a recession? And how long is this going to last? What can we do about it? And how, most importantly, is this going to affect me? That's what we're hearing from people asking those questions, and it's a very important question that really everybody needs to be asking themselves. The answer to that, how is it going to affect me, is really going to depend on what phase of life you're in. So for the younger people that are still in that accumulation phase, so they're not going to even think about retiring for 15, 20 years even, this is actually a pretty good opportunity for people in that category. So it's kind of a paradigm shift, because it seems like everything's really bad right now. It doesn't seem like a great time to get into the market. But what's actually happening when you have a long time horizon like that is you're getting a deal on whatever funds, whatever stocks, bonds you're purchasing when you make those contributions to your retirement accounts or your investment accounts. It's like going into a store and everything's 20% off. At least 20% off what it was last year or the year before that. And so that's an opportunity. So hopefully that gives some people some peace of mind that not everything is doom and gloom, and that there are some opportunities there. However, if you're in a different phase of life, which is the type of person that we specialize working with, are in the either close to retirement or in retirement, and it's different. It's not an opportunity anymore, because they're not in that accumulation phase. So they're at the point where what's most important to them is keeping what they've accumulated for their whole life and trying to use some of it finally to have the type of retirement that they want. And that's where these market drawdowns and this market volatility can really be impactful and potentially devastating to some people in that phase.
Can't control the market, but we can control our exposure to it. And that is the step and conversation that we should be having proactively on a personal level.
Right. So what we do with each and every couple that we work with is sit down and get to know all of the intricacies that make them who they are. And so that's really going to guide us with the client into what's a proper amount of market risk to take for your personal situation, because it really does depend. And unfortunately, what we see a lot of is somebody will come in and they want a second opinion, is typically what people really want, especially right now. They want a second opinion from a retirement specialist to say, what do you think? Am I do I have the right investments? Am I positioned properly for what's going on right now? And unfortunately, what we see a lot of is people that are in their 50s, 60s are positioned exactly the same as like a 20 or a 30-year-old. And that's going to lead to some serious issues because things change a lot in retirement. So you've got to deal with sequence of returns risk, withdrawal rate risk, right now, especially in inflation. There's a lot of risks that come onto the table when you go into that second phase, that retirement phase, that aren't there in the accumulation phase. And a lot of people, unfortunately, don't know about the risks or know how to protect against them.
When the market is topsy-turvy and we are entering into or nearing a big transition, moving away from the paycheck to retirement, it can compound on the concern and worry, and rightfully so, because losing a substantial amount of money in the years leading up to retirement or the first several years of retirement can significantly alter our trajectory. And I know that you and the team at Reed Financial Group do a lot of work with your clients in helping to map that transition out ahead of time so your clients can have some confidence in making that regardless of market conditions.
Right. So really what we're looking for when we develop a retirement income plan, a lot of people have an investment plan. Not a lot of people have a retirement income plan. And that's really what's most important to people. So what we do when we are helping someone develop that is really identify what are your expenses, right? So what are your basic expenses, your groceries, your pet bills, all the things that are going to be there for, a while or forever. What are those expenses? And we at least like to have guaranteed income that is not dependent on the market, cover at least your basic expenses in retirement. So with the more discretionary spending, so traveling, shopping, those sort of more, luxury things. Some people think of them as that. Some people, they don't want to cut those things out no matter what's going on with the market. So depending on their preference, you might need income sources that can cover not only your basic expenses, but also your discretionary expenses. But at least the basic expenses so that you know that when times like this happen, because they've happened before, this is not the last time something like this will happen. It will continue to happen for the 20, 30 years that people are in retirement. So when it does happen, they can still have the peace of mind that those expenses that they plan for are going to be covered by that paycheck that essentially they're paying themselves at that point in time. And also make sure that there's some inflation protection in there. So you don't have a company or a boss anymore responsible for your raises. You have to give them to yourself, and you have to do that in a safe way. And that's what we plan for when we create a retirement income plan.
Abby, you mentioned and discussed that if we've got the right mind state for younger investors, this could actually be opportunistic. But there is another silver lining of opportunity for almost everyone with a retirement account. And it may be a little painful. In fact, it may feel a little like pouring salt in the wound, so to speak. But while accounts and markets are down, there is an opportunity to do some proactive tax planning that many savers and investors may want to discuss.
Yes, absolutely. So during these times that don't happen very often, but do tend to happen, this is a window of opportunity to set yourself up even better in the future. And so that's with tax planning. So whether that's tax loss harvesting in your investments that are outside of your IRAs, or doing some Roth conversions, making sure you don't, set off any other taxes that are unnecessary. So making sure you do the right amount for a Roth IRA conversion right now, while the market is down, can be incredibly powerful, because the funds that you do convert over to that Roth, eventually we know the market's going to come back. We don't know when that's going to be, but 5-10 years down the road, we pretty much know it's going to be higher than it is right now. So with a Roth IRA that's in the long-term bucket, you can allow those tax-free earnings to grow and grow and grow, and ride that elevator back to the top. And all of that is tax-free if you do it properly. I will say that, but it can be all tax-free, which is, you're going to thank yourself in the future for
short-term pain
that
for long-term gain there.
Right. Exactly. Yeah. So just finding opportunities, even in the bad times, is really important and can lead to just a much better result. And it can just make people a little bit happier during some pretty tough times. So we try and look for some opportunities in the bad times.
Well, we have received many questions about market volatility at goaskabby.com. So certainly something we wanted to address. And the rest of the question, what should we do about it? Well, that's on a case-by-case basis, ladies and gentlemen. But if you would like to sit down for that complimentary review, to have that conversation, for a strategy session, and to put a plan together, pick up the phone and give Reed Financial Group and Abby Reed a call at 678-422-0255. That's 678-422-0255. Or you can also join the conversation at goaskabby.com. goaskabby.com. Market volatility on a lot of our minds, Abby, so something we may address again into the future, but appreciate your perspective and guidance.
Absolutely, Peter. Thank you so much.
Here to answer your financial questions, visit the website goaskabby.com for show resources and to submit your questions and get answers, or to schedule your complimentary financial investment and retirement planning strategy session. You can also reach out to Abby directly at 678-442-0255. That's 678-442-0255, or at goaskabby.com.
Investment advisory services offered through Brookstone Capital Management, LLC, BCM, a registered investment advisor. BCM and Reed Financial Group are independent of each other. Insurance products and services are not offered through BCM, but are offered and sold through individually licensed and appointed agents. Third-party ratings and recognitions are no guarantee of future investment success and do not ensure that a client or prospective client will experience a higher level of performance or results. These ratings should not be construed as an endorsement of the advisor by any client, nor are they representative of any one client's evaluation. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based only on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.